Okay, so we're going to get into the kind of the nuts and the bolts of the analysis of the numbers. So this should look fairly familiar. They're using Bold City because they've been using this example throughout, but this is a typical income statement, right? There's a balance sheet, there's a statement of retained earnings. These should all look familiar to you, and there's our statement of cash flow. So the first analysis we're going to do is what's called a vertical analysis. So it's vertical because it uses one number as the base and it compares the rest of the numbers to that base. So you can see that this is the formula down here, but I'm going to give you a specific because I think that makes a lot of sense. So when you're looking at the income statement, then the base really is the net sales. So what you're looking at is a percentage of all of the other numbers as it relates to the net sales. For example, very common one is the cost of the goods sold. How much does the cost of the goods sold cost the company in terms of the net sales? So said another way, if one company, let's say Bold City Brewing, you can see that there is a 53.1% cost of goods sold. For every $1 of goods they sell, 53 cents goes into making that good. Fair enough. Okay, so if you had, you know, another brewing company, San Diego Brewing Company, for example, and they had a cost of goods sold of 25% instead of 53%, then for every dollar they make in revenue, they'd be making 25 cents of the cost of the goods sold, or it would cost them 25%, 25 cents of every dollar. Okay, so which one is doing better at holding down their expenses? Obviously the other company, right? Almost by twice as much. So in any event, all of the net income items are compared with the base of the sales. So how much is depreciation as a percentage of sales? How much is my selling and administrative as a percentage of each sales? Now what's kind of fun about this is if I were to take the 2 years, you can kind of break this down and you can say, well, in 2017 my cost of goods sold percentage was 55%. Now it's 53%. Are they going in the right direction? Yes, they are. Okay, so balance sheet is so anyway, let me go back to the income statement just for a minute. So what do I do? So I take the 690 and I divide that by the 1.3 million and I get my 53.1%. Okay, same with the gross profit. What's the gross profit percentage? Well, you could just subtract the two, but what you would normally do to just keep your process going is you take the 610, which is the gross profit, and divide that by the 1.3 million to get the 46.9. 225 gets divided by 1.3 million, and so on and so forth. So when you get to the balance sheet, now obviously there's no net sales to use as your base, so on the balance sheet the base is usually the total assets. So how much do my cash and cash equivalents, what percentage of those of my total assets are they? So you would take 25,000, divide that by 1.205 million, and it would be 2.1%. Okay, accounts receivable 95,000 divided by that is 7.9, and so on and so forth. So total assets is the base here, right? When you get to the other side of the balance sheet, the liabilities and stockholders' equity, then total stockholders' liability is the base. So said another way, accounts payable, the 55,000 gets divided by the 1.205 million, and that works out to be 4.6%. Okay, so you can see that it's vertical because things get compared in a vertical manner. Okay, they don't get compared year over year. The 25 gets divided by the 1.205. Similarly, the 30,000 gets divided by the 880,000 to come up with the 3.4. Now, can you compare the 2 years? Yes, after you do the percentages, but for the vertical analysis, it's comparing along the vertical. All right, horizontal, a little bit different. So the horizontal, if you remember back to the income statement, For 2017, it was 1 million for net sales. You'll just have to trust me unless you want to flip back through the sides. And the net sales in 2018 was 1.3. So you take the difference between the 2 years, which would be 300,000, right? That's the dollar change. You divide that by the base period, which would be the older year. So 300,000 divided by 1 million, that is a 30% change. Okay, so you'll always use the older year as the base year to divide to find out what the change was. Okay, and this is horizontal. So now we are looking year over year to find out what the difference is. So for cost of goods sold in 2017 it was 550, then it became 690. So the percentage change was 25.5. So there's a couple of things that you can analyze, and you just want to look at this yourself, but you can see that net sales for this example grew by 30%, yet cost of goods sold only went up by 25%. So you can kind of start to see the operational efficiencies that were gained. But then, you can look at some other things that grew by 50%. Net income grew by 57. So here you're comparing year over year, so you can see why that's a horizontal analysis. Okay? The balance sheet gets done the very same way. So here you're taking the difference between 2017 and 2018, and there was a $5,000 reduction, right, between there. 30 minus 25. Yep. And that means that there was a reduction in cash. Okay, so no judgment at this point. We're just doing some calculations, and then when we're all done, we can look and see where things have gone up. Here you can see that my property, plant, and equipment went up by 50%, right? Yet my cash went down by 16.7, and so on and so forth. And you can start to do some analysis based on how you're comparing year over year. Okay, so now there's the step 4 is really analyzing the operation. So there's 5 kind of, I call it questions that we can ask, and I'll get into that on the next video.